Hey everyone, happy Thursday, July 25th. It's about 10:15 in the morning on the West Coast, and it's time for another market updates. It's a little bit of a slower week this week. This tomorrow, we're getting the big PCE inflation report, the Fed's favorite form of inflation to look at. And generally, when there's a big, BLS jobs report or PCE inflation report coming up, the markets tend to, be kind of looking ahead to that and kind of waiting to see, and not too much activity either way. So, but we did get some important housing data, so let's take a close look at that. So for June, existing home sales, so these are pre-existing homes that are for sale, vast majority of what we're seeing out there, that was down month over month, a negative 5.4%. It was expected to be down, but only 3% down. So that was worse than expectations. And again, something we've been seeing for a while as far as, rates being higher, people, maybe seeing that rent, at least up front, rent has been cheaper than, what their new mortgage payment would be. And obviously that's having a pretty big effect on home sales and activity out there. But so we're down now, just like month over month, we're down 5.4% year over year, about 3.9 million annual pace. Median home price ticked up a little bit, 2.3% month over month. It's now up a little bit over 4% year over year to 426,900. Inventory is up quite a bit, up 23% year over year, 3.1% month over month, about 1.3 million units. Keep in mind that it always ticks up this time of year. It's seasonal. This is generally when inventory is going to peak. Obviously, it's more than last year, but last year was at extremely low levels. So if we look at pre-pandemic, we're still quite a bit below that. So up, but it was up from a pretty small number. So keep that in mind. A lot of these numbers you see when you see things jump year over year, just think about how the last year went. If not a lot of things happened, like not a lot of homes sold last year, then obviously any sort of increase or in inventory, any sort of increase, it's going to look like a big number jump, but still below pre-pandemic levels. But does get us up to a 4.1 month supply. We consider normal market about 4.6 month supply. So we're, getting towards, a buyer's market. The interesting thing will be if we do have rates come down, what will happen there? It tends to be, people think, hey, rates coming down, that's going to be good for buyers, but rates coming down is going to flood the market probably with a bunch of buyers. That might trend, towards a seller's market because sellers then will have, more demand for the home. They'll be able to, demand more money, not give concessions, things like that, bidding wars. So it'll be interesting to see what happens, most likely in September when we see a tick down with the Fed rate. One thing interesting though, with more inventory, but everything, days on market has dropped, every month, 33 in March, 26 in April, 24 in May, now down to 22 days on market. That's a quick turnaround. So it looks like things that are coming on market, there's a high demand for, even though, inventory has been ticking up. Sold over the list price is down a little bit, down from last year from 33 to 29. First-time home buyers actually up from last year, 27 to 29. Cash buyers up a little bit, 26 to 28. We don't like that in my industry, obviously. We'd rather have you get a mortgage. Investors down 18 to 16%. So, overall interesting, not surprising these numbers. Are we at the bottom of the market now? Is that the bottom of activity with, rates expected to, tick down? Maybe people are more willing to sell their homes at that point and, give more inventory out there for, buyers to buy. So it'll be interesting to see what comes out of this. Is this the bottom of the market? Next thing we got was new home sales for June. So that came in a little bit lower than expected, just a little bit, 0.6% month over month. Taking a closer look, annual sales pace now is down to 7.4% year over year. Median home price up month over month, slightly down year over year. It's about 417. Keep in mind that's median is the mix of homes these builders are building. So that indicates that they're starting to build a little bit lower price homes to fill that niche. I know a lot of areas that's people are trying to find the cheapest option they have. So the more new homes in that niche, maybe the more they're going to sell. So they've trended towards that instead of more expensive homes. Total inventory is about 476,000 compared to 472 in May. Monthly sales pace is a little bit lower, so reported month supply is now up to about 9.3 months. Because keep in mind, there's only about 102,000 that are completed. So the rest of this is air. So these are other ones for sale, 376,000 or so, 374,000. Those are lots. Those are homes are just starting being built, permits drawn, things like that. So the actual month supply is only about 2 months. So it's just slightly up from 1.9 in May. So again, new home sales, one of the big weaknesses in this one has been there's not a lot of, land in the Northeast. Northeast is dragging it down. So builders don't have a lot of land to go build new homes on. So that's going to, drag their numbers down, and that's going to drag, the national number down as well. So again, home sales are slumping. Are we at the bottom for, June or new home sales as well? Initial jobless claims. Initial jobless claims last week were about 245. They came down to 235, 237 new claims were expected. 237,000 new claims were expected. Still, higher than it had been for quite a while. We were hanging out in that 210,000, number for quite a few months in a row. So it'll be interesting to see where this goes. Continuing claims are still really high, about 1.9 million. So it'll be, again, with the Fed paying really close attention to housing and, the unemployment rates, it'll be interesting to see, if this ticks up as we get, deeper into the summer and into the fall. Miscellaneous stuff. So today we did get the first reading on quarter two's GDP, and that came in higher than expected. It was expected to be about 2.3% gain. It came in at 2.9 or 2.8% gain. So like we've talked about, anything that looks good for the economy is going to be probably not necessarily the best news for mortgage bonds. But also buried in this report, there were some numbers on inflation. An early indicator of what we're going to see tomorrow's PCE inflation report, and that kind of looked a little bit better, a little bit cooler than looks like we're going to have a pretty nice drop. So if that holds, that's so today with this GDP reading, the market's kind of mixed on how they reacted, just because they didn't like this, but then the PCE part they did like. So where does that leave us after this week? Average conventional is up to 6.91. Probably ticks down a little bit as the day goes on. We were at 6.83 last week. So just kind of hanging out, like I said, just kind of treading water until we get this PCE report tomorrow. And then we got the Fed on July 31st. Like I said, the PCE report they're expecting to come in pretty good in our favor. So that should be bond friendly, which is mortgage rate friendly. And then next Wednesday, we get the Fed meeting. Right now, it's about 7% chance they would cut. I would say 0. They're pretty locked in, though, in that September meeting. Right now, the markets have that 100% that some sort of cut, either, just 1/4 of a point, 25 bits, or even, 50, 75. I would expect 25. With the meeting coming up next Wednesday, what we could hope for, I would say the best case scenario, unless some miraculous, we get some, we get a cut out of nowhere, would be, they keep it where it's at, but when their press conference and in their statement afterwards, that it's all very dovish, it's all very leading towards the markets. Yes, we're going to cut in September, all stuff we want to hear. So let's keep our fingers crossed that tomorrow's inflation report does not come out surprisingly, hot. And then by the time we talk next week, we'll know what the Fed did, but most likely they're going to, hold things where they're at and then look towards that September meeting to cut. If you guys need anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody.